Welcome to the Deep Dive. Today, we're digging into something really important if you're using or even just thinking about automated trading robots.
Yeah, it's about the need to adapt them.
Mhm.
Markets change, right?
Constantly. And your robot needs to change with them. We've got some great material here from Faida Ventures Ltd. that really highlights this.
It does. The core idea, really, is that you can't just set up a trading robot with one strategy and expect it to work forever, in all conditions. It's just not realistic.
Like bringing only your putter to a golf tournament that suddenly includes a swimming race.
Exactly. Bit limited. You need the right tool for the right job, or in this case, the right settings for the right market phase.
So our mission today is to explore why this customization is so crucial. We want you, the listener, to understand how tailoring these EAs, these expert advisors, can really make or break your trading results.
And the very first step, before you even think about changing settings, is understanding what kind of market you're actually in. They're not all the same.
Okay, let's break that down. Different market personalities, you could say. First up, trending markets. What are we looking at there?
Right, trending markets. Think of sustained moves. The price is clearly heading up for a while, or clearly heading down, like a strong river current.
A bull trend going up or a bear trend going down. Got it. What's the alternative?
Well, often you get range-bound markets. So instead of a strong direction, the price just bounces around. It hits a sort of ceiling, comes back down, hits a floor, bounces back up.
Like it's stuck between two levels.
Pretty much. The strategy there often involves mean reversion betting that the price will return to the average within that range. Buy low, sell high, within the defined boundaries.
Okay. Then there are volatile markets. Those sound energetic.
Yeah, energetic is one word for it. These are characterized by large, often sudden price swings. Big jumps, big drops, often triggered by news, economic data, that sort of thing.
Unpredictable then.
Can be very unpredictable, yes. Requires a different mindset.
And finally, sideways markets. How are they different from range-bound?
It's subtle. Sideways or consolidation markets often have even less movement than range-bound ones. The price might drift slowly or just stay very flat. It's like the market's pausing, catching its breath.
Maybe deciding where to go next.
Exactly. Strategies here might involve things like scalping for tiny profits. But the key takeaway, as Faida Ventures points out, is you have to know which environment you're dealing with first.
Because putting a trend-following robot into a sideways market is just asking for trouble, right?
Absolutely. Or trying to use a range trading strategy during a massive breakout. It's about matching the tool to the conditions. That's where adaptation is key.
All right, let's get into the how. How do we actually adapt these robots? Starting with those trending markets you mentioned, what's the approach?
Okay, for trends, the name of the game is trend following. You want the robot to identify a trend early and, ride it for potential profit.
Makes sense. How does it spot the trend?
It uses technical indicators. Faida Ventures mentions MACD moving average convergence divergence. It helps the robot see when short-term price momentum is aligning with longer-term momentum. It's a signal that a trend might be starting or strengthening.
Okay, so it looks at how different moving averages are relating to each other. What about the ADX, the average directional index? They mentioned that too.
Right, the ADX is interesting. It doesn't tell you if the trend is up or down, but it measures the strength of the trend. Is it a powerful, decisive move, or is it a weak, hesitant one?
So it's like a confidence score for the trend itself.
Yeah, that's a good way to put it. A high ADX reading gives the robot more, let's say, conviction to follow the trend identified by something like the MACD. Helps maximize potential gains if the trend is strong.
So Maggie spots the direction and potential. ADX confirms the strength. Okay. Now, what if the market isn't trending? What about those range-bound or sideways conditions? How do we switch gears?
You definitely have to switch gears. For range-bound markets, you're looking at range trading strategies. The robot needs to identify those support and resistance levels we talked about, the floor and the ceiling.
And how does it see those levels? Indicators again, I assume.
Yes, often oscillators. Faida Ventures highlights the RSI, Relative Strength Index, and the stochastic oscillator. These help identify potential overbought or oversold conditions.
Meaning a price has moved too far, too fast, and might be due for a reversal.
Exactly. If the RSI suggests an asset is overbought, meaning it's near the top of its recent range, the robot might look for selling opportunities, anticipating a move back down, and vice versa if it's oversold near the bottom of the range.
So they help pinpoint potential turning points within that range. Okay, but what about those really quiet sideways markets? Faida Ventures mentioned scalping there.
Right, scalping is a different beast altogether. It's high frequency, low profit per trade stuff.
In and out really fast.
Very fast. In a market that's barely moving, a scalping robot tries to grab tiny, tiny price movements, maybe just a few pips. It means lots of trades, very tight stop losses, because you can't afford a small move against you to wipe out many small wins, and quick exits.
Sounds intense. Requires precision.
Definitely. Precision and speed are critical for scalping.
Okay, let's pivot to those volatile markets, the bumpy ride ones. What's the absolute #1 priority for customizing a robot there?
Oh, easy. Risk management. Full stop. When prices are swinging wildly, protecting your capital becomes paramount.
Makes sense. You don't want one huge unexpected move to wipe you out. Faida Ventures suggested tightening stop-loss levels. Why specifically that?
Well, your stop loss is your exit plan if a trade goes bad. In volatile markets, things can move against you very quickly and very far. Tightening the stop means you tell the robot, get me out of this losing trade sooner rather than later. It limits the damage from those sudden spikes.
Cutting losses quickly. They also mentioned trailing stops. How are they different?
Trailing stops are clever. They're dynamic. So instead of a fixed price stop loss, a trailing stop moves up as your trade becomes more profitable.
Oh, I see. So it locks in gains.
Exactly. It follows the price up at a set distance. If the price keeps going your way, your potential locked-in profit increases. But if the price suddenly reverses and hits that trailing stop level, it triggers the exit, securing the profit you'd already made up to that point. It lets you ride a winning trade, but protects profits dynamically.
That's smart. Protects the downside, but also the upside you've already captured. Another point was reducing position size in high volatility. Seems fundamental.
Absolutely fundamental. It's basic risk control. If the market is choppy and unpredictable, you simply trade smaller amounts. If a trade goes wrong, the loss is smaller relative to your total capital. It's about reducing your overall exposure when things get hairy.
Right. Now, this all sounds like you'd need to be constantly watching the market and tweaking the robot yourself. But Faida Ventures brought up dynamic customization using machine learning. That sounds advanced?
It is. It's really the next level of automated trading. We're seeing more robots incorporating ML algorithms. These aren't just following fixed rules anymore. They analyze market data, historical data, real-time data.
And they learn from it on their own.
Pretty much, yeah. They can start to recognize patterns, maybe detect increasing volatility before it becomes obvious, or sense when a market might be shifting from trending to range-bound.
Wow. And based on that, they adjust themselves.
That's the idea. They might automatically tighten stops, reduce position size, maybe even switch the underlying strategy module they're using, all without you having to step in manually.
The example given was a robot seeing signs of upcoming volatility and automatically trading smaller. That's quite a leap.
It's a huge leap. This dynamic adaptation is what helps these more advanced robots stay effective across different market types. The strategy itself evolves with the market.
Very cool. But okay, before we all rush out to find a self-learning robot, there's a reality check. Faida Ventures really stressed. Backtesting and optimization sounds crucial.
Non-negotiable. Absolutely critical. Backtesting is where you run your robot with its specific settings and strategies on past market data.
Like a historical simulation.
Exactly. You see how it would have performed during past trends, past ranges, past volatile periods. It shows you the potential flaws and strengths of your specific customization before you risk real money.
So you can test if your volatile market settings actually worked during the last big crisis, for example.
Precisely. And optimization is the next step. Based on that backtesting, you tweak the inputs, maybe adjust the RSI level for entries or how tight the trailing stop is or the MACD settings. You fine-tune it based on historical performance.
Trying to find the sweet spot for different conditions.
That's it. Faida Ventures mentioned their own process involves really comprehensive backtesting. It's about building confidence that the robot is prepared as much as possible for various market scenarios. You're stress testing it.
Makes total sense. Okay, so wrapping this up, the big takeaway from looking at Faida Ventures material seems clear. Trading robots aren't set and forget.
Definitely not. You absolutely need to customize them for the market you're in, whether it's trending, choppy, flat, whatever. That adaptation is key.
It's about maximizing the robot's potential in favorable conditions, while, maybe more importantly, minimizing the risks when conditions turn nasty.
Well said. Matching the strategy and the risk controls to the environment.
And it leaves us with a pretty interesting thought, doesn't it? With AI and machine learning getting smarter all the time, what's next? How much more dynamic and autonomous will these customizations become?
That is the big question. Could we see robots that adapt almost instantaneously in ways we haven't even thought of yet? It could really change the whole game of automated trading.
A fascinating future to consider. And clearly, firms like Faida Ventures Ltd. are pushing those boundaries, constantly innovating in this space.
Absolutely. It's a field that's moving incredibly fast.
Well, thanks for diving into that with me today. Lots to think about. Until next time on The Deep Dive.